Good morning, guys. Welcome to the trade setup right here on BQ Prime. I'm Neeraj Shah, and it's 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 going to be an interesting day of trade simply because the cues are not necessarily the most positive. And yesterday, for the first time in many days, Indian markets actually did the reverse, which is go up and then come off from the highs of the day. But first, let's take stock of the global news flow. Joe Biden and the congressional leaders say that they are optimistic that a bipartisan deal to raise the debt ceiling could be reached within days. Now, this is the biggest thing for a lot of people. This is a non-event because they believe that this quote-unquote circus, as Mihir Vora said, has happened multiple times in the past and will get solved again. So that's on the deal. Oil is edged lower as concerns over China's recovery cloud the outlook. Tesla executives are going to set to visit India this week in a pivot beyond China. And Asian stocks look set for a mixed open. US futures too are muted. In fact, it's not just the US futures. If you look at the US markets, they're fairly a flattish performance, if you will. Hardly any changes there for the US markets. 1% lower for the Dow, with the NASDAQ just about 0.18%. The other Qs are flattish too, and the SGX Nifty is probably indicating a start, which is, I would believe, flattish performance. Yeah, 0.21%, so 18,290 or thereabouts. So no big changes anticipated there. What's the trade setup therefore on a day like this? Well, the bank Nifty, which has been the key pivot, and that support is at 43765. But I would believe that it's very likely that the HDFC Twins led downtick of yesterday will not get repeated. Yesterday was an ex-dividend thing. All of that happened. Reliance corrected a little bit, and the markets dragged lower. I doubt that the HDFC Twins, which are also a fair degree of heavyweight on the Nifty, will have a repeat or an encore in the session today. So that problem is out of the way. The mid-cap index, in fact, touched 52-week highs yesterday, which shows that there is strength in strong result-led stocks, which is palpable. It's just visible out there. And I would believe that from what dealing rooms are telling me, that strength is seen in the internet stocks, and it's very likely that there are more upsides there. So watch out for all of them. They were very strong yesterday. They were resilient for the last few days, and very likely that some more upsides are seen into select few of them. So therefore, in a scenario like this, wherein banks will not have a repeat, but the global markets are weak, but foreign funds continue to pour in money, another over 1,000 crore number seen yesterday as well. What is it that specific stocks could do is the key question. I'm starting off with a stock that might actually not do well, and then I'll come to some of the others which might do well as well. So, stock which might not do well is Jindal Steel and Power. The Q4 results, revenues were down 4.52% at 13,691. That was actually largely in line or maybe marginally ahead of estimates. But EBITDA numbers lower, 2187, the estimates were 2520. EBITDA margin at 15.97, the estimates were 18.8. Net profit down 79% at 465, the estimates were 1160. So much lower than estimated. Also, in JSPL, the con call had some sharp analyst questions around the depreciation numbers and certain other assumptions that the company did in their reportage, which has probably not gone down well. I would suspect that there might be some weakness in JSPL today for the numbers and independent of the numbers as well. So do watch out for that one. And then Amber Enterprises is the second one. Do watch out for that. That actually could do well, except for the margin performance, but everything else looked hunky-dory. Revenues up 55.04%, so 55% at 3,000 crores. The estimates were 2130. EBITDA up 62% at 203. Estimates were 152. EBITDA margin a bit lower than estimated, say 6.8 versus 7.2. So 40 basis points lower than estimated, but better than what it did in the corresponding quarter last year. But a net profit up 82% as well, 108 versus 71. Extremely buoyant show. And the point is, viewers, ignore the fact that it is 55% higher than estimated alone, because one would suspect that people who estimated didn't anticipate the kind of performance that the company will show. But a 55% jump in revenues and an 80% jump in profit by itself is a strong performance. And I would reckon that that might help the stock today. I suspect that will help the stock today. You don't always ignore the performance, but when ignore the expectations, but when the expectations are so starkly lower than what is anticipated, maybe just look at the overall performance as well, is the limited point I'm making. Credit Access Grameen had a decent outing too. NII up 32%, gross NPA ratios improved, net profit up 86%, and better than estimated as well. So suspect that this is one more stock that's actually had a good day and could do well in the session. So do watch out for that. Overall Realty, the numbers were okay. I mean, revenues up 16.75%, 961 crores, actually lower than estimated, but the revenue numbers okay. EBITDA margin at 38.35 versus 52, so the big miss there. Net profit though at 480 crores versus 411 crores. But I think the key for Oberoi, as I read some of the analyst notes, seem to suggest that it was a steady quarter, some misses there, but FY24 promises to be a good year for the company because the RERA approval has come for the coal shed project. Commercial projects will also kick in during FY24. So all of that helps the company's sentiment going ahead. Has it done as well as some of the other peers have? No, certainly not. But is there promise for the quarters ahead is the key question. I would suspect the answer there is a yes. And therefore, maybe, even if it sees a bit of a downtick, just the fact that real estate has so much of strength to itself and the fact that FY24 looks to be good, starting Q1 itself, might all help the company. So let's wait and watch. Be careful if you want to trade this one on the short side. There are some positives for FY24 which might cushion the downside on the back of these slightly weak than expected numbers. I still call it a slightly steady quarter, but operationally a big miss for sure. Redington, another company which has a bit of a miss. So, revenues 21848 versus 2886, which is not bad. But the EBITDA performance 543 versus 556, almost in line. Tad bit lower, a tad miss, small miss. EBITDA margins 2.49 versus 2.7. On that base, it is certainly a miss. And therefore, the net profit 7.6% lower at 328. The estimates were 352. A small miss, if you will, 5% lower than estimated, so therefore a miss. The point is on the cash flows, on the receivable days, all of those have looked slightly weak for Redington this time around. Plus this whole thing around, oh, what will happen because Apple will open its own stores, so on and so forth. And that fear continues to come in. So I would suspect that maybe the stock might have a mixed day. To watch out for this one as well. I might have missed some results and I'll come back to them in a bit, but let me first enumerate all the stuff that I have. So BPCL, the large capex, set up an ethylene cracker project at the Bina refinery, 49,000 crores. Another 1903 crore project in Maharashtra to build oil lubricants. That's a lot of confidence in BPCL to set up such large capacity expansion. It's massive, really. And GeoBP keeps the OMCs in focus because apparently GeoBP's launched premium diesel fuel at a price below that charged by state-run oil companies. It's very difficult to start a war in petroleum products, but does this show the serious advent of a fourth player in a space which is anyways getting constricted, if you will, over the slightly medium to long term, simply because of the advent of EVs and green hydrogen, so on and so forth. So should be interesting to see. By the way, I've mentioned Vodafone Idea, but Vodafone Group values the Vodafone Idea investment at zero. That is quite something. Is it telling of the fact as to what's due to come? And therefore, could it be negative for Vodafone Idea? And could it be positive for Bharti and Reliance because of Geo and what it could mean to subscription going ahead? That's the key question. From brokerage notes, I thought Morgan Stanley on IGL stood out for me. They were buy with a target price of 540. They say upbeat guidance on volumes and margin expansion should surprise positively. Surprise positively, keywords. EV-related concerns on demand should unwind a little bit according to them. They say the company is seeing more avenues to expand demand base for CNG. And Morgan Stanley believes that EV, diesel, and gas will all sustain together in the medium term. They believe multiples will re-rate with the volume growth guidance given by the company. So do watch out for that one. The other one that I've missed and not spoken about, but it's LIC Housing Finance. Looks set for doing well because both brokerages that I read seem to suggest that there is optimism in the numbers given by LIC Housing Finance. So watch out for that. Watch out for Airtel, mixed revenue, mixed updates, but the numbers seemed okay. So that is to be watched out for. And good results from select companies include a CCL products. Decent performance given by the company. You got to keep in mind that we just did an interview with CCL Products some time back, wherein they spoke about consistency in performance. And I think you saw that from this company. EBITDA margin constant at 22%, PAT up 62% YOY, 17% QOQ, revenues up 38% YOY, even if they were flattish QOQ. So I think, I mean, to my mind, I thought they did well. Let's wait and watch if there is a bit of a beat there or a bit of positivity there in that performance. Triveni Turbines, margin miss, but the sales numbers looked okay. And I already spoke about Amber, so that is fine. Weak results, Chemplast, Sanmar. JK Paper had a bit of a miss as well, if I'm not wrong. So that kind of left a bit to be desired. I'm just trying to see if I missed something else. VMart had a very poor performance, really. Sales were down 24% QOQ, even if they were up 30% YOY. But EBITDA down 78% QOQ, 54% YOY. Margins at 4% versus 13%. Really, I mean, it's a really weak performance by VMart, and certainly could have a bit of a reaction in the session today. So I think I'll watch out for VMart as well, in addition to JSPL, as being something that could be a bit of a wobble in the session today. That's it on the trade setup. A bunch of conversations lined up. Of course, you may want to tune in for some of those. And thanks so much for tuning in to the trade setup today. Just one quick update. If you are interested in figuring out if consumption stocks are worth buying into, if FMCG might have a good day ahead today or no, or a good year ahead today or no, I think we've got the right voice today on Talking Point. Milind Karmarkar is as strong a consumption sector voice as they come. So that conversation on Talking Point at 10 a.m. is certainly one you don't want to miss. I'm really looking forward to hear Milind's view on what to do with FMCG, what to do with some of the other consumption themes, because he's an ace when it comes to that pocket for sure. So do try and tune in for Talking Point today for sure. Thanks for tuning into the Trade Setup.